Hello. U.S. stock futures edged higher today, but are on course to post hefty weekly losses in the aftermath of the Federal Reserve's hawkish signals. Fears of interest rates staying at the current level for the long term resulted in bond yields surging, which has put pressure on the indices, especially the tech-heavy Nasdaq. Closing levels for the week will be determined by the Purchasing Managers Index reports for September due at 4:45 p.m. Eastern Time. Oil prices rose today following the news that Russia has banned exports of gasoline and diesel with immediate effect to stabilize the domestic fuel market. This adds to the already tight supply situation as the OPEC Plus maintained previously announced production cuts. Despite today's rise, oil prices are on course for their first weekly loss in 4 weeks as investor risk appetite was curbed by high U.S. Treasury yields. The Bank of Japan maintained its short-term benchmark interest at negative 0.1% early today and stated that it will continue with its current pace of asset purchases and yield curve control to stimulate the economy. While this had been widely expected, data released earlier showed that the consumer price index came in above the 2% target, while a core reading hit an over 40-year high. The Japanese yen fell following the news, trading close to a 10-month low against the US dollar. Microsoft's potential acquisition of Activision Blizzard is one step closer to being cleared, as Britain's antitrust regulators stated today that Microsoft's alteration of the initial proposal has substantially addressed previous concerns. To recall, the US tech giant had proposed the divestment of cloud rights for existing Activision games, as well as new games over the next 15 years to French game publisher Ubisoft Entertainment. The United Auto Workers Union's deadline for new labor agreements is today at 12 p.m. Eastern Time, at which it will become clearer if the auto strike will be extended or not. UAW President Shawn Fain is due to speak 2 hours before the deadline, outlining the plans that will join the strike if a deal is not reached. Should the strikes widen, the disruption could impact more than just the companies involved, but also the automaker sector, the chip sector, and the U.S. economy as a whole. As PhillipCapital team, we wish you a happy weekend.